Every fall, Apple publishes two things: a keynote, 2 hours of theater, and this, 80 pages filed with government regulators where misleading investors has real consequences. It's called a 10-K, the annual report every public company is required to file. Almost nobody reads it. We did. Buried in these 80 pages is one gap that explains the whole company, and one stream of money that a judge could switch off in a lawsuit where Apple isn't even the one on trial. That's number 5. We'll get there. First, the gap. When Apple sells you a subscription, iCloud, Apple Music, App Store purchases, it keeps about 75 cents of every dollar. When it sells you an iPhone, it keeps about 37 cents. Same company. Double the profit on one side. Keep that gap in mind. This is the fine print, a 10-K in 10 minutes. 5 numbers from Apple's fiscal 2025 filing that actually matter. No hype, no keynote, just the document. First, the machine itself. Apple sold $416.2 billion of stuff in fiscal 2025, up 6%. The iPhone is still half the company, $209.6 billion. The Mac, $33.7. The iPad, $28. Wearables and accessories, $35.7. And then there's the green bar, services. That's not gadgets. That's the money Apple collects over and over. App Store purchases, iCloud storage, Apple Music, advertising, and a famous deal where Google pays Apple to be the search engine on your iPhone. $109.2 billion. Bigger than every non-iPhone product combined. Hold that green bar in your head. It is the whole story. Which brings us to number 1. Services brought in $109.2 billion, up 14%, in a year when the whole company grew 6% and the iPhone grew 4%. And the profit on it got even fatter. Apple now keeps 75.4 cents of every services dollar, up from 73.9. Think of it as a toll booth. You bought the phone once, but the tolls, the apps, the storage, the music, keep coming every single month. It's growing fastest, it's earning most. And that, as we'll see, is exactly the problem. But first, the cracks. Number 2, China. $64.4 billion in sales, down 4%. Here's why that stings. Every other region grew. The Americas up 7, Europe up 10, Japan up 15. China was the only decline, and it's the second year in a row. The filing's explanation is one line, primarily due to lower net sales of iPhone. People bought fewer iPhones. And remember, China isn't just where Apple sells. It's where, in the filing's own words, substantially all of the hardware gets made. Hold that thought. Number 3. Watch both hands. Out of every dollar Apple brings in, the profit slice grew overall, from 46.2 cents to 46.9. Looks great. But underneath, the profit on hardware actually shrank, from 37.2 cents down to 36.8. The overall number only went up because the fat profit services side became a bigger slice of the pie. Import taxes are already eating into the hardware profit. Services is papering over it. And why did hardware profit shrink? The filing gives you exactly 8 words: a different mix of products and tariff costs. Tariffs are import taxes Apple pays to bring devices built in Asia into America. How much did that cost in dollars? The filing never says. That silence is information. Number 4. Apple's bottom line, the profit left over after everything including taxes, jumped from $93.7 billion to $112 billion. Looks heroic. Now watch the trick. Apple's tax rate fell from 24.1% to 15.6%. Why? Because the year before included a giant one-time bill. Europe ordered Apple to pay years of back taxes in Ireland. That made last year look artificially weak, and this year look artificially strong. It's like comparing your savings to the one year you paid a huge fine. Some of that dazzling profit growth is the comparison, not a business suddenly running better. And number 5, the courtroom. Google pays Apple billions of dollars to be the built-in search engine on your iPhone. Nearly all of that is pure profit. But a court case called United States versus Google, where Apple isn't even the one on trial, could ban that arrangement. It doesn't stop there. The U.S. government sued Apple directly, saying it illegally locks users into the iPhone. And Europe's new tech rulebook is forcing Apple to open up the App Store, other app stores, other payment systems, with investigations that carry heavy fines. Here is the filing's own language on the Google money. Remedies, quote, could materially adversely affect the company's ability to earn revenue from such licensing arrangements. Translation: billions in nearly pure profit now depend on the outcome of a lawsuit Apple can't control. So hold the two halves of this filing next to each other. The engine, 75-cent margins, aimed directly at it, three governments. Meanwhile, the machine keeps printing. The business generated $111.5 billion in cash this year, and Apple handed most of it straight back to shareholders. $89.3 billion went to buybacks, Apple buying its own shares off the market, which makes every remaining share a bigger slice of the company. $15.4 billion went out as dividends, the quarterly cash payment to anyone who owns the stock, and the board just approved another $100 billion for future buybacks. Oh, and research and development hit $34.6 billion, more than the entire Mac business brings in. But here's what 80 pages under federal liability still won't tell you: four numbers Apple never discloses, what the tariffs cost in dollars, what Google actually pays for that default slot, what the App Store makes on its own, and what Apple spends on artificial intelligence. The four numbers you most want, and the filing goes silent on everyone. One more thing before the question. A 10K is a snapshot. It froze Apple in September of 2025. Since then, two quarterly report cards have landed, and they are loud. The December quarter, $143.8 billion in revenue, up 16%, Apple's biggest quarter ever. The March quarter, $111.2 billion, up 17%. And the toll booth from number one. Services set an all-time record in both. And the crack in China, here's the twist. After 2 straight years of decline, China grew 38% in the December quarter and 28% in March. The iPhone 17 turned the slide around, for now. The courtroom from number 5, though, still no verdict. The biggest risk in the filing is still wide open. So the question to sit with: if services is now the profit engine, and services is precisely what the courts on 2 continents are aiming at, is Apple's biggest risk in the supply chain or in the courtroom? Tell me below. And the fine print number 2 is your call. Drop a ticker in the comments, and the most requested filing gets cracked open next. This is the fine print from the Asymmetric. Research and education only, never investment advice. Subscribe and bring us a ticker worth reading.